MMTs, what we're looking at here is a Google January 11 580 call. And basically, this is a Google chart intraday right now, and we're trying to consolidate half of the move as far as the chart goes. The thing that we're going to talk about here is the actual 580 call with a $1.80, a 29.60 low with a 60 penny drop with a 31.40.40 high. The calls in November up here were $60 a contract. They are currently, when we take a look at the pricing controls within the premium being added or deleted, meaning that they are diminishing the premium value or they are ascending the premium value based on the actual price movement of the name. This is Google right here, and these are the contracts right here. So you can see that the 122 of 2011 580 call based on a 1.75 with the range of 5 point. So we diminished to the low end, and from the bottom up in price action, from the bottom up, and what that bottom up is this right here. This is that bottom up right here as far as the name goes. And let's go ahead and highlight the bottom up. The beginning part of the trading day, this is where they put that bottom, and this is that bottom up, and we're going to see how we hold there. So when that was occurring, that meant that the option premium value, the actual value, what the price movement is that there is a wide spread. See, it's 3070 by 3150. They're wanting people to buy another high. 3140 was the high, and the bids are dropping. So there's a big difference between the bid and the ask here. We are currently in a triple witch for December, and I'm going to pull in the December 12/18 580 call. On the thing that the MMTs need to be aware of, market maker prices and public pricing options are totally different. A market maker pricing control system such as we have is all about the wholesale value and about understanding what the true premium value in that options market maker pricing level. The platform here is showing us that for the intraday lows that we put in on the name at 593.83 right there, there's our recent high. We have been maintaining this half action bar, which just so happens to be 596.03. And we can see that currently the bid and ask is 596.33 by 68. It's got a wide bid and ask. So this is going to be the crucial part and how we are going to get these options. See the 580 call for December. They hooked them down to 1480, popped these to 1820. They expire on Friday in a triple witch. This is a 580 call in the front line month, which will become the new inline month, and you can see the kind of premium differences that you're getting. You close at $16, he drops it to $14.80, and he just ransacked it up there to $18 in the price action. Now MMTs, when we take a look at what we're going to be doing with this one, is we can understand when they tighten up and we're firming here in price, we can move in and start buying a few of these. So we've got a fairly decent movement for what we're looking at here. If the IR right here, this is the IR, and this particular IR has to stay above 75. That's going to hold that price action half bar level. That's going to hold in here where you're going to see the pricing control. So what we're going to do is we're going to put some contracts out here, and we're going to try to tighten up the bid, because as we break higher, the ask is climbing and it's 50 cents wide. So a bid of 5, and we're going to come on the bid just for a minute. And see, someone went ahead of me, because the minute that we broke up in price, they started giving that January contract some premium. And they took me above. My bid was 31.10. That's my limit order. When we ticked up above, you can see where they start raising the bid and the ask, 60 cents wide. So what am I going to do for right now is I'm going to cancel that order right now. Cancel all. Okay? So I've canceled it, and what I'm going to do is I'm going to watch what the majority of the crowd does, and I'm going to flip over here to CVOE. And basically you can see that it's tightening up here, but you're slightly above 597. So the last print, you can see how they're taking the premiums. You can see the difference between both 580 for this expiration. That's what I want my MMTs to see. I want you to see the differences in the price action and the volatility and the wider price action ranges. Look at the spread here. Now someone just printed it. We just broke higher. We are breaking higher. We are breaking higher. Let's pull the chart back up. There's that big breakout. We took out those price action tops. They started giving more premium here. We're breaking up. The upper end of that resistance is 599. It's a triple wick. There's that one here, and here's that 580 call that we're going to try to get. And a 2.3 ratio to a 2.4. Now, you can see what the difference is. And what counts, though, is the ratio low to the ratio high. That's almost $4. This one here is, do the math, 2.9. And we just made another high. And we broke up above all of these price action bars in the name. Right here. There's that big breakout. That's what we were looking for. That they did not roll back over. The Dow is screaming higher. Right now, the Dow, you can see it right here. The Dow just broke out again. You can see the increase in the Dow here. Okay, you can. So basically, what we're going to be looking at here is that we're up 69 handles on the Dow, and we had a big 3-minute breakout. This one is going to pull back a little bit. So price action is different. We've got Apple breaking out the same way. We got the bull breaking out the same way. This is options expiration, triple witch volatility, 31.5 by 31.90. Look at that price action. Look at the name over here and the MMTs. We're going to be taking a look at how we can firm up compared to the other 6 trading days. So we aren't fading back. And all of the NASDAQ 100 and S&P and the NASDAQ comp are making higher highs right now. And we're making higher highs in the equity names across the board. The pricing control of this option is how we trade it between now and expiration Friday. And exactly what the premium is worth at wholesale and retail exits for profitability.